Good morning, everyone. And to all Malaysians, happy Malaysia Day. I'm Grace, your host for today's event. So welcome to our MQ Trader webinar on Singapore REITs sector analysis. We'll deep dive into office and retail REITs today, and we are honored to have Mr. Chua Yimin to be our speaker for this webinar. So before we start, let me introduce MQ Trader to you. I'll tell you who we are and what we do. So MQ Trader stands for Malaysia Quantitative Trader Group. We are an independent trader group that uses quantitative methods to perform our trade analysis and make our decisions in trading. So as we seek to bring such a method to our traders, we have developed the MQ Trader stock analysis system, and we've made it available for all our MQ Trader members. And this is how our MQ Trader stock analysis system looks like. We've included different trading strategies in it, which can be conveniently accessed by our members. And the system will compute buy and sell signals based on formulas from various strategies. It will help you to easily identify possible trends. So in short, it is a tool that brings what the institutional investors have to the retailers' hands. And this enables our traders to make quicker decisions and with greater confidence because they are getting access to a steady stream of information and trading strategies. And we find it super important for all investors and traders to know all this if you want to be a successful investors or traders. As the father of value investing, Benjamin Graham says, successful investing is about managing risk and not avoiding it. So you can manage your risk by referring to a reliable tool like the MQ Trader stock analysis system that compile various trading strategies for you. And to use this amazing tool, you just need to be an MQ Trader member. You can sign up to be our MQ Trader member via the link in the comment section. Just some announcement. For all who do not have a trading account with MQ Trader, if you sign up to open a trading account with MQ Trader today, you will get an extra 500 MQ points, and this trading account will allow you to trade in Singapore and some other countries as well. And it's free to open a trading account with us because we, the MQ Trader Group, will cover the account opening fees for you. And the 500 MQ points are only limited to people who sign up today, and the points will be credited to you once your account is successfully opened. All you have to do is to send us your contact details through the open account link in the comment section or by scanning this QR code on the screen. And our support team will contact you to guide you on the account opening process soon. Okay. And here are the benefits you will get when you open a trading account with MQ Trader. For more information, you can visit the link as well. For MQ members who have RSVP with us, you can claim your 300 MQ points by the end of this webinar. All you have to do is to complete a short quiz that will be sent to your email after this and submit a screenshot of any part of this webinar in the quiz. For those who have RSVP with us but yet to join MQ Trader Group, you can sign up now to claim your 300 MQ points as well. You just need to click on the link in the comment section now and fill in a username, email address, and password to sign up so that you won't miss out on your rewards. And it's free. It's just like signing up for a Facebook account. So this live webinar is available on Zoom and our Facebook page. So I would encourage you to share our Zoom or Facebook links with your friends so that they will be able to learn more about Singapore REITs as well. We will have a Q&A session towards the end. You can type out your questions to our speaker at any point in both Zoom and Facebook Live, and our MQ Trader team will compile them and send them to our speaker. This webinar is a continuing series from our previous webinar on Singapore REITs. If you have missed our last webinar, the webinar recording is available on our MQdemy and Facebook page. The QR code and links are on the screen. You can go and watch it after this, and I'll bring up the page after this towards the end also. So we'll be sending out today's webinar recording to all who registered for this event. For those who have not registered for the event, you can register now by providing us your email address via the comment section. You can set to send to panelists only so that you can receive your email address. Or you can send your request to our MQtrader email at admin@mqtrader.com or to our WhatsApp number 012-805-8077. All this information are on the screen as well. Okay, from our last webinar, we already know that over the past few years, Singapore REITs have provided a stable source of passive income to investors, and it has also been proven to be one of the most resilient asset classes during the current pandemic. So due to overwhelming response from our previous webinar, we've decided to deep dive into specific REIT sectors in Singapore. And today we'll be talking about the office and retail REITs. In view that Singapore government is gradually reducing safety measure restrictions, vaccination rates are also increasing in Singapore. We expect more economic activities to get back to normal. And it will be interesting to discuss on how these changes may impact the office and retail REITs in Singapore. We have also invited our speaker from previous webinar, Mr. Chua, to share with us again. Without further ado, let's welcome Mr. Chua Yi-Min to share with us his insights. Mr. Chua, I'll pass the floor to you.
Thank you so much, Grace. Let me just share my screen. Good morning, everyone. Thank you so much for joining us this morning for this webinar. I'm so glad to be invited back again to do this sharing on Singapore REIT sector. So again, before I start, that would be great if I can understand the audience a bit more. So let's have a little bit of interaction. You all can actually key in your answer in the chat so that I can have a better idea of the profile of the audience and I can pitch the session correctly. So again, do me a favor by keying in 0, 1, or 2. Please key in 0 if, let's say, you have never invested in stocks before. Okay, a total newbie. Key in 1 if you only have invested in Malaysia stocks but nowhere else. Key in 2 if you have already invested in Singapore stocks. Okay, key in 2 if you have already invested in Singapore stocks. Okay, great. Thank you so much for feedback. I saw a lot of ones and some twos. So I got 0. Hi, coffee. Thank you so much. Okay, so it'll be a 1s and 2. Okay, great. Okay, that means the Singapore stocks is not something totally new. Great. Thank you so much. Now, so as Grace has mentioned just now, this is actually a sequel to the previous seminar which I've done on REITs on general basis. Okay, I just want to have a sense of how much you all can remember from the previous seminar. Okay, can someone please share on the chat now? So how many REITs do we have now in total in Singapore? Can someone remember the number? In total in Singapore, how many REITs do we have right now listed? Not 45, a bit too high. 28 is a bit too low. Okay, 5 is definitely too low. Okay, between 28 and 40, okay, 35 and 43. Okay, between 35 and 43. Between 38 and 43. Okay, 39. Congratulations to Chin Kong. Sorry, no prizes for you. Okay, so now in Singapore we have actually 39 REITs. 39 REITs. And can yours actually name what are some of the property types? Total there are actually 5 property types. Okay, out of these 39 REITs, they are divided into 5 categories of 5 property types. Can I just trouble you to share what are some of the property types that is available? Thank you so much. We have retail, we have office. Thank you. Residential, no. Okay, residential, no. Yes, we have warehouse, data center. We actually classify that under industrial. So there's two more. Can someone actually name? So we actually named 3 already. So we have office, retail, residential, no. Okay, we don't have residential REITs. Warehouse, data center, we actually classify them as industrial. Yes, healthcare, hospitals, and last one. Okay, we have healthcare REITs, and the last one, the last category of REITs. Anyone can? Hospitality. Thank you so much. Hotels. Okay, great. Thank you so much. So I think you already have quite a good understanding of office and retail. So I'll try to make this session as suitable for you, as customized as possible. Probably I'll just go through some basic information, and I will have more time during the Q&A to answer some of the concerns. I think we have quite an experienced group here. So probably you all already know about REITs. You all have questions. Maybe I'll spend more time during the Q&A session later. Okay, good. Thank you so much for your response. So the topic for today is this, Singapore REITs, deep dive into office and retail sectors. So I actually chose these two sectors to talk about for very good reasons. Of course, personally, I think that there is a lot of opportunities for these sectors. And of course, throughout this webinar, I'll explain more. Okay, for those who are seeing me for the first time, so my name is Emin. Okay, I'm MD and founder for this company called Invest Coach. So this is my company in Singapore, and we specialize in education for retail investors. So I do different form of education, of course, stock investing. I also do real estate investing analysis, and of course, financial planning. So these are some of my flagship programs that I do in Singapore, and of course, hopefully one day I can bring over to Malaysia. My flagship program, Create a Second-Hand Stream to Long-Term Share Investing. So this program I've run for 10 years already. So this is where I share on my investment process, on how I build up my stock portfolio. Okay. So this is what I do. I just want to emphasize here a bit that I am a FA. Of course, I'm quite sure you all know what does FA stand for. FA stands for Fundamental Analyst, or I practice fundamental analysis. So basically, whatever I share is actually based on FA. So for FA, we actually work on, you can say, two assumptions, or either that two main characteristics. So number one, what is most important to us is the underlying business. So this is very key to FA. Okay. There's this saying, for FA, we don't buy into stocks, we buy into businesses. So of course, the reason why you should choose the REITs is because you know that the underlying business, the rental is good. So that is most key to us. Also, in fact, I probably spend the most time analyzing that segment. Why? Okay, the business for retail and office is actually going to be good. Okay, so the other key thing about characteristics of FA is we are always a long-term investor. Okay, you're always a long-term investor, especially for REITs. If you are thinking of buy today, sell tomorrow, buy today, sell tomorrow, you are bored to death with REITs. I want to be very frank. So REITs, the price movement is relatively slower compared to a lot of other instruments. Okay, so for REITs, especially for REITs, we usually buy and hold for long term. Okay, later I'll share with you my trading strategy. So generally speaking, I actually use REITs as a retirement tool. Okay, so eventually I'm quite sure all of us want to achieve the goal of financial freedom, whereby the passive income will supersede or will exceed our expenses. Then we basically can retire, no need to work. So basically REITs is a very good instrument that can help us to do so. Okay, thank you so much for the question. So when I say long term, generally speaking, when at the point of me buying, I am prepared to hold the stock for at least 3 to 5 years. Okay, that's for long term in general. For REITs, right? In fact, when I actually buy REITs, every time I buy REITs, I'm prepared to hold for 5 to 10 years, as long as the property is actually still good. So in fact, now I even have this habit of forgetting the price that I bought for REITs. So once I think it's good, I just buy, because I have no intention to sell. Okay, for REITs, it's actually very clear for me. I'm there for the dividends. I'm a landlord. Okay, I'm not there to do trading. So if you actually want to do trading, there are actually better instruments. I'm not saying that REITs price don't move, but there are better instruments for do trading. But for REITs, generally speaking, is buy, hold for long term, collecting dividends. Okay. Standard disclaimer, please take note, I'm here as an educator. Definitely not giving investment recommendations. So yes, throughout the webinar, I'll be using some exact specific examples. This is just to illustrate the process. By no means I'm giving investment recommendations. So please, seek proper advice before you do your investment. So these are the three things that I will cover today. Also, these are the three things that you need to bring back with you. So you have decided to spend 1 hour sitting in front of a computer. It's not easy. Okay, now that everybody is what do you call it, zoomed. Okay, every day is Zoom. So if you have decided to, yes, this is worth it, I want to spend 1 hour sitting in front of the computer. Okay, so do get something out of me. So these are the three things that you will be learning from today's webinar. So I'll actually share with you, number one, the overall office and retail and REITs, the overall office and retail REIT sector. Okay, next then we talk about, how has the sector performed so far. and what are some of the growth drivers. Okay, why am I so excited about this particular sector? And like I said, we'll dive deeper into some of the specific REITs to actually have a very detailed view of what is happening to some of these REITs right now. Okay. Okay, let's look at the office and retail REIT sector overview. Okay, so of course, this is more for those who are joining us for the first time. What's a REIT? Very quickly, is a vehicle structured for investors to put their capital for investment into large-scale income-producing properties. So long story short, you buy REITs, you are buying property, you are a landlord. Of course, you are not the sole landlord. You are actually joining a lot of people to be landlord of the properties, and how you make money, collect rental. So this is what the REIT does for you. So again, just very basic information about REITs. They go by a trust structure. Okay. Mandatory distribution rules. So at least 90% of the profit have to be distributed. So this is the only instrument listed, in fact, in most stock exchanges, whereby based on black and white, okay, they must give dividends. They must give dividends. So a lot of our blue chip, yes, they do give dividends, but they can choose not to. But for REITs, they cannot. It's contracted based on black and white. They must give dividends. At least 90% of the profit have to be distributed. So next thing here is this, they have this mandatory debt ratio limits. So they can only borrow up to 50% of the property value. So I really see this clause being very useful during the COVID period. So I'm proud to say that during the COVID period, last year and this year, of course, you all have heard that, offices, you have companies working from home. We have lockdowns, so basically the malls are empty, and yet none of the REITs have to get into trouble because of pandemic-related issues. Okay, so one of the reasons is actually because they cannot borrow too much. They can only borrow up to 50% of the property value. Okay. So today I will only focuses on two categories. As you mentioned just now, in fact, total now REITs we have 39 over 5 categories. So today I'm going to talk about 2. So once again, for those who are interested to actually watch my previous webinar, okay, I believe Grace just now has already shared with you how you can do so. If not, you can actually contact them. Okay, they will actually point to you where you can get the recording of my previous webinar. So for today, I'm just looking at 2 categories. The office building. So in total, we have 10 office building REITs. So please take note now, for a lot of Singapore REITs, unlike the Malaysian REITs, for a lot of Singapore REITs, their properties are not in Singapore. So there's actually quite a lot of properties that are based, that are actually in overseas. Okay. So out of these 10 office suites, in fact, later I'll share with you, in fact, there's only about 3 or 4, okay, that only have Singapore properties, which we want to focus in today, okay? But in any case, we have 10 office suites, so these are the 10, and for retail malls, we have also 10 retail malls, same thing, okay? So same thing, a lot of them are actually not in Singapore, and today we're only looking at REITs with a majority of the properties in Singapore. So these are the 10 retail mall REITs. So for information, like for example, quite a number of them actually have property in China. So for those who actually want to invest in China properties, you can also do through our REITs here in Singapore, like CapitaLand Retail China Trust. If you actually do visit China, you'll realize that there are some malls, of course, in fact, in most cities, you will see this CapitaLand Mall, okay, a bit like Walmart, okay. So you can actually find them, and a lot of them are actually part of this REIT. Then of course we have BHG, okay, they have a property in Beijing, okay. What else? Let's see. Sesua REITs, they actually have quite a few outlet malls in China, okay. So basically, if let's say you want to have a portfolio of global properties, so Singapore REITs market can actually do this job for you. Okay, as mentioned, so for the purpose of today's discussion, we actually want to be very focused. So as per the title suggests, we're doing a deep dive. So in fact, these are the few REITs we are going to pay attention today, which is basically REITs whereby most of their properties are in Singapore. Okay, so please take note now. So for all these REITs, they also have some of them not all, some of them have also overseas properties, but predominantly their properties are in Singapore. Okay, or either that majority of the properties are actually in Singapore. So we will be looking at these few REITs today. So 1, 2, 3 office. So as I mentioned just now, out of the 10 office REITs that we have listed, so we have only 3 whereby majority of their properties in Singapore are Keppel, Mapletree Commercial Trust, OUE Commercial Trust. Sorry, OUE Commercial REIT. Okay, so as for retail malls, we only have 4. Okay, we have 4. Okay, Phrasal Centrepoint Trust, Landlease Global Commercial REITs, Star Hill Global REITs, and SPH REIT. Okay, like for example, Star Hill, they also have quite a bit of properties in Malaysia. I'm quite sure you all know. Okay, Landlease actually have a property in Italy. Okay, but of course their main property is actually in Singapore. Okay, for integrated, so integrated basically these 2 REITs, they have properties in both office and retail. Like for example, Suntec, I'm quite sure for those who actually visited Singapore before, I'm quite sure a lot of you visit Singapore before, you have go to Suntec. A lot of you all will like the fountain. Okay, go and touch the fountain water for good luck. So that is a very classic example of you have both the office and you have a retail element. Okay. At the same time, CapitaLand Integrated Commercial Trust, so they have just merged. They used to be 2 separate entities, so they are merged. So this basically this REIT, you'll be buying some of the major offices building in Singapore. You'll be buying some of the largest retail malls in Singapore. Okay, so this is what integrated does. Okay. Now let's look at the overall market performance first. I actually do see some questions about overall market performance and growth drivers. So thanks for the questions. Okay, I probably will look at them at the end of the session. So feel free to keep the questions coming in as much as possible. We will try to answer them. Okay. So yes, I think there's a question of overall performance and growth drivers. Let me just dive straight into it. So this is the current REITs market situation. What you are actually seeing on screen is the REITs index, Singapore REITs index. Okay. So as you can see here, okay, of course, in 2020, beginning of 2020, there's a plunge in price for obvious reasons due to COVID. And subsequently, the prices has recovered. So of course, REITs, in fact, REIT sector is one of the earliest that recovered. But the one thing I want to stress here is this. So in fact, it has not gone back to pre-COVID level yet. Now, the price level for quite a number of REITs have not gone back to pre-COVID level yet. So of course, in today's webinar, we want to discuss that is this fair or not? Okay, is it fair that the prices actually haven't recovered back? So that is the question we will probably explore more today. Okay. Now, this chart now, yes, it's a bit messy, but let me just walk you through. What I try to do here is this: I want to give you a proxy of how does the different REIT segment perform. Okay, so this is generically speaking. This is generically speaking. Okay. Okay, whereas this chart, I want to share with you how does the REIT segment overperform. So let's look at this thicker blue line first. This thicker blue line. Okay, this thicker blue line. This is the STI index. Let's use this as a benchmark. Okay, this thicker blue line. So STI also haven't went back to pre-COVID, but very close. So during pre-COVID, STI was trading around 3280. And now we are about 305 to 3001. So I believe it will get back by this year, but let's see how. So anyway, let's use the blue line as a benchmark. So I have actually picked up some representative REIT from each segment. Okay, just now we talked about it, total there's 5 segments. So I've actually picked up each representative REITs from each segment. Okay, so this yellow one is the healthcare. So obviously, healthcare not affected by COVID. So in fact, their performance is better. So you can see, so healthcare REITs, so they are one of the first to have recovered from COVID and yet surpass the what you call that, surpass the pre-COVID level. So if you can look at it clearly, this is the pre-COVID level. They have well surpassed it. Healthcare. Okay, this purple line is industrial REITs. So same thing, industrial REITs has performed very well. Okay, industrial REITs has performed very well. So for obvious reasons, industrial REITs, again, the impact from COVID is very minimal. So number one, industrial REITs, we're actually talking about like e-commerce, warehouse. Obviously, they are not affected. So during COVID, in fact, the warehouse business are doing a lot better. Okay, the trading still goes on. So warehouse business is a lot better. So the other reason here is this, a lot of industrial REITs, they're on very long-term lease. Like for example, 5-year lease, 10-year lease. In fact, we have a few industrial properties, they actually up to 30-year lease. Okay, the tenant. So very stable. So seasonal issues like COVID, okay, they are not likely to, they are not likely to cause a dent to their growth. So industrial also has been doing very well. Okay, so we look at the bottom one. So this is obviously the hospitality REIT. Okay, hotels. Yes, hotels have not been the best performer. Okay. And if you ask me, it will still take a while more. Okay, so just to set the record straight, our hotel industry is also improving, is also recovering. So in fact, recently I tried to book a staycation. Singapore, nowhere to go, so we end up going for staycations, which is like, staying in a hotel. If you actually want to book a decent hotel in Singapore for staycation, you probably also want to do like 1 month in advance. If not, okay, it's out very soon. So it's indeed recovering, but it's lower. End of the day, okay, no doubt about it, hotels still have to depend on tourists, depend on traveler, and yes, that segment is still not recovering at all. So now we actually want to focus on these two. Okay, as you can see, the light blue and the pink, retail and office, which is down here. So the question here is this, okay, are they likely to actually go up further? Are they likely to go up further? Okay, again, like I said, as a FA, we look a lot at fundamental data that is most important to ask. So I will actually go through some of the basic numbers, and maybe you decide to see whether that this kind of price, does it deserve this kind of price, or the price should actually go higher. Okay, now I have highlighted the occupancy rate for the retail and office REITs. Yes, I'm not going to lie about it. Okay, because of COVID, the occupancy actually dropped. Okay, that is a fact. I think everybody knows. Okay, you have work from home, you have lockdowns. Obviously, some of the tenants, they cannot take it. They will actually leave the particular properties. Okay, but what I want to stress here is this. You can see that the drop is actually not very significant. Okay, look at it carefully. You're not saying like, oh, 50% of the malls become vacant or what, or 30% of the office become vacant. No. Okay, so the light green bar is actually as of last year, 31st March 2020. And the darker green bar is as of this year, 31st March 2021. Okay, so yes, there's a drop, but you can see that the drop is actually quite insignificant. Basically, the occupancy rate for retail and office is actually still well above 90%. And if you ask me, during this kind of period, I think these are quite impressive numbers. Okay, we are not talking about 30% drop, 50% drop. No. So in fact, it's only like 1-2 percentage point. Okay, so please bear in mind of that. Okay, we are not seeing a huge vacancy rate right now in office and retail sector. Okay, but yet now you can see that the price for most of these REITs have not recovered. So this is Mapletree Commercial Trust. So they have they have properties like, for example, in Vivo City. Okay, Vivo City, and some of the offices around there. Okay, so you can see that, hey, you know, the prices are actually this is the peak price pre-COVID. We are looking at about maybe 250. And now we are looking at close to more of $2. Okay, and yet you can see that the occupancy rate is actually still high. So is this kind of price, is it fair? You make your own decision. SPH REIT, so they actually own properties in Paragon. Okay, Clementi Mall. So Clementi Mall is a neighborhood mall. So if you actually ever go to some of neighborhood malls, it's actually very crowded. So in fact, now they have problem, you know, maintaining the safe distancing in some of these neighborhood malls because it's actually very crowded. Also, same thing. The picture is quite the same, and now is it won't be half. Okay, so this is about maybe 110, 115, and now it's at 90 cents. So it's easily 20%, 30% discount from the peak. So again, is this level? Is it fair? So CapitaLand Integrated Commercial Trust. So we're actually talking about some of the grade A office in Singapore, some of the grade A retail malls in Singapore. And again, they actually paint the same picture. So I leave it up to you to decide, hey, whether this kind of price, do you think is fair, doing justice to all these properties? Okay, so that has been the overall performance, historically speaking. So over the past 1-2 years, that's what happened. Yes, occupancy has dropped. I don't have to lie about it. Okay, but the drop is insignificant. But you can see that the price of the REITs have even dropped further. So we are talking about easily 20-30% drop for some of the REITs prices. Okay. Now, interestingly, okay, despite this current harsh condition, we are actually seeing quite a few growth drivers for these two sectors. Okay, so even though you know, COVID, things are bad, people are not spending, people are losing jobs, but interestingly, we're actually seeing some of the few growth drivers. So let me just give you some evidence. Okay, like what you see on the screen here is this. Net demand for CBD grade A office spaces turned positive in first half. So what does this mean? So basically, of course, yes, we have tenants leaving the office building, okay, but we also have new tenants coming in. Okay, we have new tenants coming in, and based on first half 2021, okay, we have actually more take up compared to more leaving. So this is what is happening right now. So you may be wondering, who is actually coming into Singapore offices? As the article says, you can see that facing pressure at home, the Chinese tech giants are actually expanding in Singapore. Okay, so a lot of Chinese tech companies, they have actually set up their overseas HQ in Singapore. So of course, their main China HQ is actually in China. But a lot of them actually want to branch out. They also want to serve the global market, and they have decided to set up overseas HQ in Singapore. Like for example, Tencent is here. TikTok owner ByteDance is here. Okay, Alibaba is also here. So they actually have offices here. And in one of the articles that I caught, like for example, ByteDance, they actually took up 3 floors, and they are paying like about 80,000 Sing monthly rental. 80,000 Sing monthly rental. So that is the kind of take-up rate we're actually having right now. Okay. And not only that, because of the COVID, so Singapore is one of the places whereby they actually have better control over the COVID. Okay, globally speaking, realistically speaking, and people are recognizing that. So we actually saw this article. The super rich are actually choosing Singapore as the world's safest haven. Okay, so I'm quite sure you know when, let's say for example, when the rich come in, So they will also bring along certain industry, like for example, the private bankers, the family officers, okay, they will actually come in along with them. So obviously, they are going to take up the office space. At the same time, when the rich come in, what's going to happen? They're going to need more fine dining. Okay, I believe more Michelin star restaurants will actually set up in Singapore. Okay, so all this eventually will be very helpful to the office space, the take care of office space and the retail space. Now, from the overall economic perspective, things are also looking quite good. So this is quite recent. Private sector economies raised Singapore 2021 growth forecast to 6.6%. Now, this 6.6% has a very significant meaning. Why is that so? Okay, so last year, 2020, our GDP actually dropped by about 5 to 6%. Okay, so if let's say this year, our growth is actually about 6.6%, okay, which means our economy perspective, we have fully recovered. From an economic perspective, fundamental perspective, we have fully recovered. Okay, of course, the recovery is not universal. Okay, our aviation sector, our tourism sector is actually still badly hit. Okay, but overall, the overall economy has fully recovered. So in that sense, do you think that our prices should also go back to pre-COVID level? So that is the thought I want to leave you with. So given that our fundamentals has gone back up to pre-COVID, shouldn't the prices go back to pre-COVID level as well? Okay. Okay, in terms of the COVID control, yes, so 75% was, I think, a few weeks ago. By end of August, so in fact, we already hit the milestone of 80%. 80% milestone. Now, this is actually, again, very significant. So based on this, our government has already changed sort of the way they deal with COVID. So previously, our government is actually very focused on controlling COVID. They want to bring the cases down to zero. So in fact, this is what all of us will be praying for. Every day zero cases. Okay. But now the government has actually changed their mindset. So basically, we already call this an endemic. That means we are prepared to live with the COVID, which also means that the government now will shift their focus to opening up the economy. And they know that, okay, with all the lockdowns, with all the safe distancing, a lot of business are affected. Okay, a lot of livelihood are affected. So you cannot just keep controlling the COVID. So basically now the government is talking about, okay, let's live with COVID and let's focus on bringing the economic activities back. So this is actually quite, again, obvious in these few days. So in fact, now Singapore, I think yesterday we have about 800 new cases. Okay, but there are no signs of talking about either lockdown or or either that tightening of measures. In fact, they are actually talking about, or there's some discussion about even relaxing the measure further, despite this number of 800. Okay, so you can really see that, yes, now the government is ready to bring back the economy up, regardless of the COVID already. Also, of course, things are still fluid. In fact, yesterday the minister made a statement, said to an extent that he's still keeping the fingers crossed. Hopefully, the death rate and of course the severity rate can be reduced because of the high vaccination. Okay, but then it's not proven. Okay, theoretically it should be that way, but it's not proven. So he also, keeping his fingers crossed. Okay. But if everything goes well, that means we will see more and more of the economic activities coming back. Again, this will have great benefits to the office sectors, to the retail sectors. So another thing that Singapore is doing is they are starting to open the borders. Now we can travel, and of course people from Germany can just travel to and from Singapore without being quarantined. Okay, without being quarantined, and more countries are in talks. Okay. Okay, I was actually hoping to go travel out this year, but probably not. But I think by next year, I believe we can start travel to more countries without being quarantined. Okay, so my point here is this. So basically, for the office and retail REITs, based on the price performance, they have not really get back to pre-COVID level, as you can see here. Okay, but yet, you know, from a very fundamental perspective, things are looking up. You have basically the occupancy rate, it didn't drop as much, and yet you have all these different growth drivers that end of the day will actually prop up the demand for office and retail. So this is what I'm trying to say for this segment. Okay, again, thank you so much for all your questions. I will try to take as many of them as possible at the end of the session. Okay, so for the last part of my sharing, I want to talk about case studies of some specific REITs. So basically, I want to deep dive into some REITs. Again, please remember disclaimer. I'm not here to give recommendations. What I want is to give you a better idea of when you look at the REITs, what exactly are you buying? Don't just buy the REITs because it sounds nice or it has a nice name. That's why I buy. No. So please understand what are some of the underlying properties that they have and what are the specific areas to look out for. So again, if you actually want a more detailed discussion on the specific areas, please refer to my previous webinar. Okay, but if not, just a quick reminder here. So basically, when we actually look at REITs, we actually try to minimally answer these three questions. Okay, what is the current dividend yield? Okay, is the price now cheap or expensive? That is one. Okay, number two here is this. Okay, the property. Do you see actually growth in demand for the property? That's two. Okay, and number three is the financial risk. Are they borrowing too much? So these are the three things we have to look at, minimally speaking. Of course, as in all things in life, the more effort to put in, okay, the better chance of getting a better returns. But very minimally, you should actually look at these three things when you look at REITs. Now, let's look at the office sector first, Capital REIT. Okay, so what I've actually shown you here is what are some of the properties under Capital REIT. So you can see that we are talking about some of the grade A, some of the newest office in Singapore. Okay. So if you actually come to Singapore, the CBD area, so this is obviously in CBD next to Raffles Place MRT station, Marina Bay Financial Center, so very near to Marina Bay Sands, One Raffles Quay. So these two are some of the newest office buildings that we have, and of course things like Capital Bay Tower. So for Capital REIT expansion, predominantly they have about 80% of the properties in Singapore. They also have properties in Korea, Seoul, and Australia. So same thing, the properties are very similar profiles, grade A office building type. Okay, so if you can just take a look at some of the photos here. So it's actually grade A office building type. Now, what I want to stress on here is this. You can see that the occupancy rate is actually still very high, 97%. 97%, as you can actually see, or 96.7%. So that is how resilient the properties are, okay, during this COVID period. Also, please don't have the impression that now the whole world is working from home. The people are vacating the office. That is not true. That's not true. So in fact, if you actually speak to some of these MNCs, okay, rental cost to them is relatively speaking is less significance. Okay, so in fact, I was just chatting with one of my friend, with the MNC, his salary alone, his monthly salary, okay, one person monthly salary can probably cover the monthly rental for, I think, for one floor already or something like that. So relatively speaking, let's say to staff costs, in fact, the office rental cost is actually not so significant. So that's why you can see a lot of MNCs, especially those attracted by the Grade A office building. Okay, they are not say dying to vacate their offices. Yes, there are some, okay, but not all. So usually, if you talk about those that really vacate offices are the smaller companies, you know, companies with like 10 men, 12 men. So they are the one that probably will vacate. But if you talk about MNCs, okay, yes, I don't deny that some of them is actually reducing their floor space. Okay, but then I want to say that it's not significant. You're not talking about like 20-30% drop. We are still talking about 96.7% occupancy. Okay. So as mentioned, three things. So one thing, look at the property. These are Grade A office properties, still very high occupancy rate. And the next thing you may actually look at is the what do you call that? The financial risk. Okay. So in terms of financial risk, I actually look at two ratios. One is interest coverage ratio and leverage. So sometimes quite gearing, sometimes quite leverage, or sometimes quite debt to asset ratio. Okay, can anyone remember now? I talked about this in the previous sharing. So for interest cover to be healthy, I want this number to be more than how many times? Can someone remember? Okay, interest cover ratio should be more than how many times? Anybody can remember? Can someone please share in the chat? Okay, if not, maybe you want to guess. So you need the interest cover to be more than how many times to be proven as healthy? Anybody want to harness a guess? Okay, thank you so much, Hui Xuan. More than 3 times. Thank you so much. So to me, 4 times is, of course, very healthy. So what about aggregate leverage? So personally, I have this magic number should be less than how many percent? Again, can I just trouble someone to share? Okay, it's in my previous webinar. So once again, if you have not watched it, you can watch the recording. So for aggregate leverage, I'm actually looking for less than 40. Thank you so much, Stephanie. Thank you so much. Less than 40%. So obviously this company will pass. So again, you know, as I mentioned just now, during this COVID period, so despite some of the lockdowns, despite some of the vacancy, we don't see any REITs okay, get into trouble because of a COVID situation. Okay, why? Because they are well controlled. So in fact, the average gearing for all the REITs is only about 37%. So that is actually quite what do you call that? Quite prudent. So next, we talked about the dividend yield. Okay, this is the price. I actually did these slides on 2 days ago. Today is 16. Sorry. So you can see I did these slides on 3 days ago. This is what I have done here. I have actually took, okay, so down here, correct. So they have released the first half 2021 DPU. This is first half 2021 DPU, and I actually do an estimate of the full year DPU by just simply take this number multiply by 2. And I believe I am actually being very conservative by doing so. Why? Because first half 2021, in fact, Singapore, we are still on partial, okay, there are certain periods of lockdowns, and we are still quite on strict safe distancing measures. So I believe just by using this number and multiply that by 2, I am already quite conservative. And yet with this number, okay, I multiply by 2. If I divide that by the price, okay, so just to give you an estimate, so assuming now the price is $1, we're talking about dividend yield of 5.88%. And if let's say the price is 120, we're talking about 4.9%. So it's basically we're talking about 5% yield, 5% yield. Okay, is 5% yield good or not? You think about this, Okay, think about this. Number one, so let's say end of the day, we are buying properties here. So we should compare apple to apple. Okay, don't tell me compare with Bitcoin or whatever. Let's compare apple to apple. Okay, if you actually buy a physical property, let's say in Singapore, and in fact in Malaysia, if I'm not wrong, or in fact anywhere in Southeast Asia, is it easy to get a rental of 5%? I am not too sure lah. Okay, I am not too sure. Especially if you are talking about grade A office, right smack in the CBD area. Is it easy to get 5%? Definitely not in Singapore. Okay, I can't really say much for Malaysia and other places. My impression is no. Okay, but to get 5% is not so easy. So that's one. Okay. So number two, of course, there are actually some benchmark you can compare with. So this one, dividend yield 5-year average. So this is, we actually got this from SGX stock screener. Later, I'll share with you very soon. So their 5-year average dividend yield is actually only about 4.4. Okay. So this website, SGX stock screener, they actually take the 5-year average dividend yield is actually only about 4.4%. So basically, currently, if you're doing at 5%, means what? That means the prices are actually quite attractive. Or, okay, as per popular way of comparing, okay, so this is quite popular. Personally, I'm not a fan of using this method, but I know it's widely accepted. You can compare book value. So the book value now is 129, and we are actually looking at about $1.07. Okay, so is the price undervalued? You make your own decision. Okay, so let me just share with you how I get this number, dividend yield 5-year average. You can go to sgx.com, securities, stock screener. Okay, so let's say I look at Capital Read. Okay, under valuation, so you can see this number here. So now we are looking at about 5%, and the 5 average is only at 4.426. So is this a good number? You make your own decision. Okay, now let's take a look at a retail REIT. So retail mall REIT. So we look at Phrasal Centrepoint Trust. These are some of the properties that is within this trust. If you buy this REIT, you'll be an owner of all this property. Okay, so very interesting. Okay, we already call this all the point. So there's actually this joke about this REIT. It's actually called Phrasal Centrepoint. Okay, you have all the point properties. Okay. Except for Centrepoint. Centrepoint, we have a mall in Singapore called Centrepoint. Centrepoint is actually not inside. But the rest of the point is actually all here. Okay, Causeway Point, North Point, Waterway Point, Changi City Point. Okay, now, if you realize, if you actually take a closer look at all these properties, you have realized that they are something in common. They are actually all what we call suburban malls or neighborhood malls. Okay, they are not in like your Orchard Road or your main shopping belt. They are in neighborhood malls. So neighborhood malls, one thing about neighborhood malls is this, they are actually very resilient because got COVID, no COVID, we still need to go to our supermarket. Okay, got COVID, no COVID, we still need to go for a haircut. Okay, so this is the, if you actually ever come to some of Singapore neighborhood malls, you can see it's how crowded. Like for example, I actually stay quite near to one particular neighborhood. Okay, so if let's for Sunday, I don't even dare to drive to the mall because basically if I try to drive into the mall on Sunday, this period of time, I'll just spend all my time looking for a parking spot. Okay, so that is how crowded our neighborhood mall is. So in fact, again, they are actually one of the first to recover. Of course, I don't deny during lockdown, yes, we also cannot go to malls. But once it's opened up, so they are actually one of the more, they're actually one of the first to actually have recovered. Okay, so they have a small investment in hectare. I'm quite sure you're familiar with hectare, but this is actually in terms of percentage, I think it's about 10-20%. Sorry, I cannot remember the numbers, but this is not significant from the overall portfolio perspective. Okay, so same thing, the occupancy is very high, 96%. If you actually come to the mall right now, it's not like, oh, you see a lot of empty slots. No, that's not happening. The occupancy actually remains high. Okay, same thing, you have a very healthy, what do you call that, financial numbers, gearing level below 40%, interest cover more than 3 times, way above 3 times. So very healthy. You don't see problems with the bank. Let's look at the prices. So I actually did the exact same exercise. I took the first half 2021 DPU, which I think is quite conservative. Based on this DPU, same thing, we are also looking at about 5%. Okay, 5% now is about 230. So we're looking at about 5%. The 5-year average yield 4. So again, it's actually quite high. And if you compare to NAV, it's actually trading quite close to the NAV right now. Okay, but in terms of dividend yield, which I actually pay more attention to, I think the yield now is actually quite attractive. Okay, last one. Okay, time is also running out. I left about 10 minutes. I think I will finish in time. So the last one, CapitaLand Integrated Commercial Trust. So this is the one that have all the grade A offices and all the grade A malls in Singapore. Also, these are some of the properties that you'll be owning if you buy these suites. Okay, offices. Okay, if you go to our CBD, you'll be owning some of the what you call that, the newest, the most swanky offices in our CBD area. And one thing unique about this is they have actually quite a few integrated developments. So what are integrated developments? Are basically, you are talking about one property, you have different property types. Okay, Raffles City, I'm quite sure this is the more famous one. You have the retail, you have the offices, you have the hotel, all in one property. Okay, so again, if you actually buy this suite, you'll be the owner of these properties. They also have some stake in some other REITs. So CapitaLand China Trust, they are also invested in Malaysia, MRCB Quill REIT. So of course, this is again another CapitaLand REIT listed in Malaysia. Okay, same thing I want to show here is this, the occupancy 97, office 93, very healthy occupancy. The financial, yes, you can argue that it's slightly above my criteria, but I think for such with such a good standing, I'm actually happy to accept that is even though it's slightly higher than my own benchmark of less than 40. Okay, but you look at the interest coverage is actually also quite healthy, 4 times more than 3. Prices wise, same thing. We are actually looking at a range of about 5% yield, and their 5-year average is only about 4. So basically, it's quite healthy. Price to book trading quite near to book value again. But like I said, to me personally, what is a better valuation measure is to get dividend yield. And I think at this rate, so this yield is actually quite attractive right now. Especially when this value, like I said, I'm using first half 2021, which I think is quite a conservative number. Okay, great. Last 6 minutes or last 5 minutes, I just want to drive across one very important point when you invest in REITs. So as mentioned at the beginning of the webinar, so REITs is a class of its own. It's not really very good for trading. Okay, of course there's price movement, but relatively speaking, it's not the best instrument for trading. So how you should actually invest in REITs? So if you ask me, diversification is key. Okay, maybe I think the best way is to share with you my own personal example. I am 46 this year. I'm hoping to retire in another maybe 9 years time, 10 years time. And for me to retire, I want to have passive income that supersede my expenses. And this is what I'm actively doing right now. So the way I see REITs is like a bank account. So for me, instead of saving money in the bank account, I actually save money in REITs. So very regularly speaking, so in fact, on a monthly basis, I would just put 20% of my salary into a retirement saving account. And I do on regular, so now I'm still doing on monthly. On a monthly basis, I will invest in REITs. Okay, so obviously now I am actually building a snowball here. Okay, this is what I'm doing. I'm building a snowball here. I still keep pumping in money here, and I'm actually getting dividends from REITs, which I will reinvest them. So this works like a snowball. So if everything goes well, so fingers crossed, if everything goes well, so I think I just need maximum 10 years. This dividend element should be enough to cover my expense. Then I will hit the state of becoming financially free. Okay, I'll be hit the rate of becoming financially free. And next time when I'm there, if you want to listen to me talk, I'll probably have to fly to Bahamas. So anyway, it's good to dream. So that is my dream right now. Snowballing my wealth based on this mechanism. Very simple mechanism. Every month, I'll just buy into REITs. Every month, I just buy into REITs. When I receive dividend, I reinvest on a monthly basis. So please take note, the key here is diversify, buy into different REITs at different time. So now my portfolio should have close to about 20 different REITs, 20 different REITs all bought at different times. Yes, some of the REITs are being repeated. Okay, that means like this month I buy, maybe 6 months later I buy the same again. Also, I should about 15, 20. So the way I really treat it is like a saving account. And now very good thing. I see the dividends come in, the dividends getting more and more significant. Even though now, yes, it still cannot cover expenses, but you can see that the dividends increasing. So it's quite a happy moment. And yep, everything goes well. I'm on track to, hopefully retire in 10 years time. Okay, I just, also as mentioned, so this is a good passive income stream. So yes, I will be depending this for my retirement. And so far, and because it's being structured, like I said, 90% of the profit has to be distributed. So relatively to a lot of other instruments, this is one of those that can give the most steady passive income. So I believe on the day I retire, of course, I'm also invested in other kind of stocks, other kind of instruments. I believe that on the day I retire, easily 70% of my money will actually be REITs. So this is, I believe what's going to happen. Why? Because on the day I retire, passive income is the main reason. So now I'm actually still on wealth accumulation. Okay, yes, I start to build passive income. Okay, but my main aim now is still wealth accumulation. But when I retire, my main aim becomes passive income. So I believe a lot more is actually into REITs, which I'm actually starting to build up right now. Okay, I will just share with you some of the resources that I actually use to put together the presentation today. So a lot of resources are all public information. So if you really want, you can also be your own analyst. So now with internet, everybody can be an analyst already. So stock screener, I'll definitely do a demo very soon. Okay, the other one is the research report. I will go through that. And of course, the company presentation. So let me just go into it right now. So this is the stock screener. You can go to sjax.com, securities, price screener, stock screener. Okay, so just key in any REITs, capital REITs. So you can get information, the price, the valuation information is here. Financial statements, so on and so forth. So this is one place. Okay, next is research and education under research sector. Okay, sgx.com. Okay, maybe I just start this easier. sgx.com. Research sector. Okay. So S-REIT Property Trust Chartbook. Okay. Very good information. I think whatever information about REITs, you can all find it here. So this instrument is quite good. So by the way, since you are here, in Singapore, there's actually this thing called the Reits Etf. Okay, Reits Etf. So if let's say you don't want to just buy REITs one by one, you want to like one shot buy a basket of REITs, you can also do so. So you can just buy the Reits ETF. So basically, you'll be buying a basket of REITs, and each REIT is a basket of properties. So you're actually buying baskets and basket of properties. So that's what happened if you go and buy Reits ETF. But please take note, there's actually 3 Reits ETF. And only this one is purely in Singapore. So the other 2 ETF, you have REITs from other countries. Okay, lastly, I just want to share with you the company presentation. Okay, so this is where I get a lot of information about their occupancy, their financial ratios. You can just go to the website of any REITs, let's say Capital REIT again. Investor relations, financial results. Okay, presentation slides. So they are supposed to report at least half yearly now. Some still stick to quarter, but usually at least half yearly. So this is where you can get all the information. Occupancy. Some of you like to look at WALE, weighted average lease expiry, and the DPU, as you can see here. Okay. Then the capital management, all the ratios, you can get it from here. Okay, 438.9. Okay, good. Very good timing. So yes, we have about 15 minutes for Q&A. So while you key in the questions, I know there's quite a bit of questions already. So thank you so much. I will just run through the ending slides. So conclusion, office and retail REITs price have not fully recovered. There are presence of growth drivers for these sectors. In fact, these sectors are still performing very well, and I still see growth in them. Occupancy remain high despite the pandemic situation. Okay, and please, most important, don't just focus on what to buy. How to buy is also very key in this investment game, not just on REITs. How to buy is also very key. So if you ask me for REITs, okay, it's definitely not a trading instrument. Okay, if you want to use REITs, it's for someone who actually want to build a REITs portfolio. Okay, buying different REITs at different time, accumulating REITs, a portfolio, and after that we enjoy the passive income. So that is the right strategy for investing in REITs. Okay, so of course, unfortunately I don't have time to talk a bit more, but this is what I'm doing. Okay, simply put, buying different REITs at different time, build a portfolio. And if you ask me, yes, in fact, some of the, I think so, I have like REITs, if I'm not wrong, I bought from almost 15, 16 years ago. I can't even remember the price. I don't have to also, because basically I think now the price is, I don't know, 100%, 200% over. I don't even bother. But I'm just enjoying the dividends. So this is a bit like, growing a golden goose. Okay, so there's no reason for me to kill the golden goose unless I have lose confidence in the properties. But if not, as long as the golden goose keep giving me the golden eggs, I don't see any reason to sell. Also, in fact, for me, for REITs, if you ask me, I'm prepared to hold for 5 years, 10 years. Okay, so that is my investment strategy. Okay, so for those who like to engage me after the session, okay, please like me on my Facebook. So this is where I'm very active on, facebook.com/IamChua. Or either that you can scan on the QR code you can scan on this QR code. Okay, to access my Facebook. So do like me, please like me, so you can get my investment thoughts on a very regular basis. I do share very regularly. If you have any questions, feel free to ask me, but please take note now, as a speaker, I am not allowed to comment specifically on whatever counter. So if you ask me, hey, can I buy CapitaLand today? Can I buy CapitaLand today? Sorry, I cannot answer questions like this. Okay, I'm not allowed to. Okay, how I wish I could. Then next time I buy already, then just tell the whole world to buy, then price go up, please sell. So sorry, I cannot. So, but any other questions related to analysis, okay, related to some of the information I shared today, I'll be very happy to answer. But I cannot answer counter-specific questions. Okay. So please don't ask me like, what are my 3 favorite REITs right now? You know, what are the REITs you're buying? Sorry. Okay, you can try 101 different ways to ask me. Okay, I have been a trainer for 10 years and I will have 101 different ways to turn you down if you are trying to get stock recommendations from me. Okay. Okay, good. I think we can move on to the Q&A session. Or Grace, you want to make any announcement first before we go to Q&A?
Yeah, I will make some announcement first, just a recap. Yeah, so thank you, Mr. Chua, for sharing with us today, and to all our viewers, thank you for tuning in to our session. We will start our Q&A session very soon. If you have any questions, continue to send in so that we can compile them and we will answer it later. Let me just share my screen. Okay. So if you want to know more about trading in Singapore, we have included a related link in the comments section and on the screen as well. Please feel free to visit the link for more information, or you can just scan the QR code here for more information as well. So if you want to receive the latest market insights at your fingertips, we will encourage you to follow the SGX Invest Telegram channel. You can just search for SGX Invest in your Telegram app, or scan the QR code here now to save the link as well. Yeah, this is the QR code for the Telegram. Okay, a quick reminder, should you choose to open a trading account with MQtrader, all you have to do is to send us your contact details through the open account link in the comments section. Opening a trading account with MQtrader is free, as we will cover the account opening fee for you. And you can claim an extra 500 MQ points when your account is open if you sign up today. So you can do so as well by scanning the QR code here. Next, for MQtrader members who have RSVP with us, if you would like to claim your 300 MQ points, remember to complete the short quiz that will be sent to your email after this and include a screenshot of the webinar in the quiz itself. If you have yet to sign up for an MQtrader account, you can sign up now. It's just like opening a Facebook account. So if you have missed our previous webinar, the webinar recording is available on our MQdemy and Facebook page. The QR code and links are on the screen as well. You can go and watch it after this. So you can scan the QR code now to save the link as well. Yeah, so we will be sending out today's webinar recording to all who registered for this event. For those who have not registered for the event, you can, and if you want the recording, you can register now by providing us your email address via the comment section, or send us your request to our email at admin@mqtrader.com or to our WhatsApp number 012-805-8077. You can find all this information on the screen as well. You can have a screenshot, quick screenshot to save it. Okay, so let's start our Q&A session now. Yeah, so Mr. Chua, there's an audience asking, would you still be buying REITs as money savings even when the price is increasing? Since you've mentioned you will be snowballing your investment.
So far you can always still find decent REITs at decent price. So of course, generally speaking, we can actually split the REITs into two segments. So grade A, grade B REITs. So grade A REITs, you have very solid sponsors. You have all the grade A buildings. Okay. So yeah, for those REITs, yes, usually for them to be at lower price is a bit more difficult because everybody wants to buy them. So when they become cheap, yeah, that will be my first priority. So now and then we can find opportunity. But if you talk about grade B REITs, you can often always find decent REITs at decent price. So far okay. This is what I do precisely what I do. So every month I have a selection criteria. I have a set of criteria, okay, to see what are the REITs that can fall out. So yes, there are certain period whereby, okay, based on my criteria, I don't find anything. But I think the longest is about like 3 months. 3 months I cannot find anything. If not, every month I still can find something to buy. It's just that if let's say the grade A REITs or they're become expensive already, I look at the grade B REITs. But of course, grade B REITs is higher risk. You must study more in depth. Okay, you must really have the confidence of the properties. Okay, but most of the time they actually give very good returns. So long story short, to answer your question is, yes, if let's say, for example, there are periods whereby I cannot find nothing, then I will do monthly. But so far I've actually done this easily for like 5-6 years already. Okay, doing by monthly. I think the longest break I have is about 3 months. Yeah.
Yeah, okay. So what's your alternative plan if something goes wrong?
What do you mean something goes wrong?
As in maybe when you buy a REIT and then it doesn't go as your plan, maybe
okay, so
something,
basically it's already planned up front. That's why I focus a lot on diversification. Okay, I don't just focus on one REIT. As I said, now my portfolio have about 15 to 20 REITs. So did all the REITs perform? I'll be very frankly to you, no. So there are some REITs I bought, it actually didn't perform. But it's like 1 out of my 20, or in fact 1 out of my 100 purchases. So yeah, it's bound to happen. Okay, so it's really pre-planned already. Then of course, as I mentioned just now, I don't just invest in REITs. So to be a prudent investor, okay, of course, that is another topic for another time. So we are actually very focused. So end of the day, I'm actually very focused on what I want to achieve, and then what are the products to help me achieve, how do I diversify. So I always tell people that I say, in fact, I have six buckets. Okay, 6 buckets where I put my money, 6 different buckets. Okay, ranging from fixed income instrument to even like properties, and of course, REITs is definitely one of the main ones. And diversify upfront. So it's already upfront pre-plan of all the contingencies. It's not about something happened. It's not about something happened that I said, oh, what to do. So just to give you some numbers, like for example, last year when the market hit the bottom, okay, last year I think Malaysia also Singapore also hit the bottom. So my stock portfolio, including REITs, I'm not going to lie about it, can lose about I think 13 to 15%. But my overall portfolio I only lose by about 3%. Because my overall portfolio, including things like property in Singapore was actually very resilient, didn't drop. Then also include things like fixed income, annuities. Of course, that one, the numbers will drop. So it's like 3%. So it's an upfront rather than what this happened. Okay.
Okay. Yeah. There's always opportunities in trading.
Yeah, of course.
Yeah. So with more and more companies favoring flexible working locations as permanent arrangements, would people moving to online and also more people moving to online shopping, how do you think this will impact the office and retail REITs in future?
Okay, so number one, so as per what the numbers I've shown, so basically the work from home is not going to have a big impact based on the numbers. We're talking about 97 occupancy. So if you ask me, this is going to last. This is going to last. If you actually go and speak to a lot of management, okay, from the management perspective, they want control. It's quite obvious. If let's say I got 20 staff all at home, you all wake up already, not, are you really working or are you playing computer? Sometimes it's not a function of trust. It's like, it's a function of control. As a manager, as a management, and to a lot of all these companies, the rental cost is actually quite insignificant. Okay, maybe the monthly rental cost is just pay one more staff. If I fire one staff, I already can cover the rental cost. It's not like, oh, it's a very significant number. Okay, so in that sense, I don't think this work from home is going to last. Okay, eventually, yes, it's going to be a hybrid lah. Okay, there's going to be a hybrid, but office space is actually still required. At least based on what I see, I think that's going to happen. Okay, as for online shopping, you realize now that in fact now online shopping and shopping mall, they serve two very different functions. Okay, probably we do it by realize. So okay, I'm quite sure, like for example yourself, sometimes you go shopping mall, not thinking of buying anything. I'm quite sure you have the experience. I just want to go shopping mall.
Window shopping.
Window shopping, I have no intention to buy anything. But then, of course, usually I'll still spend money there, buy a bun, eat a lunch, watch a movie. Then in the end, the shirt quite nice, I'll buy. Okay, whereas you talk about online shopping, okay, usually is still quite very targeted. I want to buy a shirt. I go and search for a shirt. I go and buy. So you can see that they actually going forward still serve different function. And my point here is this. These two different needs are still there. Okay, so I don't deny the fact, yes, e-commerce has taken away some of the retail mall needs. But the part about, okay, people just need to go to retail mall to window shop, to relax, to kill time, okay, that part of needs, online shopping is not taken away yet. Okay, and because of that, they still have a role to play. And yes, I think retail malls is still going to be there in 5 to 10 years, at least.
Yeah, okay. So another question is 90% of profit is distributed for REITs in Singapore. So is this profit after tax or before tax?
Okay, what tax? Okay, so basically,
the profit.
Okay, so number one, so for REITs, they don't have to pay. Most of REITs, they are income tax free. Okay, they actually enjoy tax transparency. Okay, so basically they are only subjected to things like property tax, stamp duties. So whatever you receive is already after the tax that the REITs have to pay. Okay, so as an individual, so once I receive the money, right, okay, in Singapore, dividend is tax-free. If you're actually buying as an individual name, okay, it's tax-free. So I don't need to pay any tax on my dividend if I buy as an individual. Okay, but as a corporate, it's different. But then, of course, if let's say you want to repatriate the money out Singapore, there may be some withholding tax. That is beyond me. But I think answer to a question, whatever I get is already after tax. And in Singapore, dividend is tax-free. So dividend is tax-free, so I don't have to pay any tax on the dividend I receive.
Yeah, I think your answer also answered one of the other questions, asking whether a foreigner is taxed for the dividend. So yeah, no, for individual account.
Yeah, so it's individual, no, but if let's say they move the money out of Singapore, that one I'm not too sure. It's beyond me.
Yeah, okay. So I think the last question, how would you define your long-term investment? How many years or months? How would you define it?
As I mentioned earlier, it's about, okay, for normal stocks, it's 3 to 5 years. So the keyword here is being prepared. Prepared. So every time I buy, I'm prepared. So let's say, for example, today I buy a normal stock. Okay, I'm prepared to hold for 3 to 5 years. So if let's say I buy a stock today, let's say DBS, I buy tomorrow drop, day after drop. To me, I don't care. I'm an investor. I'm not a trader. Okay. So unless it continues drop for 3 to 5 years, then I care. If not, I think this are normal up and down. I actually don't care. Okay. But the keyword here is prepare. If let's say I buy this stock $1, tomorrow become $2, I sell. First I sell. One day make 100%, you don't sell. Okay. But so the keyword here is prepare. So for REITs, I'm prepared to hold for 5 to 10 years. Okay, as mentioned, for REITs, it's really more for the dividends. I'm not there to do trading. If I want to do trading, there are better instruments. I'm quite sure there are better instruments for trading. REITs is definitely not the most ultimate for trading. Yeah,
okay. So a few more questions, sorry. Yeah. How will the Evergrande issue in China affect the REITs market in China and Singapore, since like Singapore REITs is quite diversified?
I don't think there is any property, at least in Singapore REITs, that's related to Evergrande.
What about the news where a lot of China companies are coming into Singapore? Would that affect them also?
I doubt so. So I don't see a relation yet. So like, for example, a lot of companies that come in Singapore is actually tech companies. Okay. So when you actually talk about Evergrande, I think now their worry is to more of the impact on the financial systems. Okay, let's say, for example, they basically borrow a lot of money from the banks, then after they cannot return, then after the banks have to what do you call that, have to recognize a loss, so on and so forth. So the impact on the REITs, completed REITs market, I at least for now, I don't see any relationship yet. So you have to see how this thing develop, but I don't see a very direct relationship at this moment.
Yeah, I think this will be the very last question. So for investing in REITs, do we still need to regularly monitor, since you mentioned we are to keep for about 5 to 10 years, or we just buy and forget about it?
Yes, we do. Okay, but the way we monitor is really try to understand the property. Okay, I think no point looking at, not say no point. So by the time you see the annual report, occupancy drop, it's too late already. So let's say, for example, today I read the report saying that, capital rate occupancy dropped to 70%. By then, that means the price 3 months ago already dropped, so too late. So when I monitor means what? I actually try to understand the property. Okay, like for example, retail malls. Today I'm still confident. Okay, I think that retail malls have space. So when I actually go to shop, so a lot of times when you see, if you ever see me in shopping mall, you'll see me going to funny places to see whether is there empty shop lot.
Okay.
Or either is there any vacancy. So I actually do that. Then yes, it may come a point in time where I change my view. I think that okay, I think shopping mall is gonna be in trouble. People will just go online and buy. People don't care about shopping mall. Okay, maybe that day will happen. So when I start have that thought, then I will sell. So that's how I monitor right now. Not so much on the numbers, not so much on reading annual report, so on and so forth. Okay, more of really understand the physical properties.
Yeah, from time to time.
Yes, correct. That's correct.
Yeah, okay. I think that's all for our session today. And to all our audience, thank you. So if you would like to watch a replay of this session, it will be available on our MQdemy and Facebook page. We'll also be sending out the video recording link through our email to those who have registered with us. So if you have any inquiries, you can contact us on our MQ Trader Facebook page, Instagram, or i3 Messenger as well. And don't forget to complete the short quiz that will be sent to your email. And for those who want to open a trading account, remember to do so now. You can find all the links in the comment section, and we'll keep this webinar live for about 10 more minutes so that you can refer to all the links again. And we wish everyone a fruitful week ahead. Stay safe, and I hope to see all of you in our next session. So once again, thank you, Mr. Chua. Thank you everyone for participating in this webinar and making it a successful one.
Okay.
Yeah,
thank you so much. Don't mind, I just make a comment. Actually, I saw a lot of questions. Sorry, time is running up. So of course, if you want to engage me, you can go to my Facebook page also. Facebook.com/IamChua, IMCHUA. So if you want, you can contact me there. I'll try to answer as much as I can. Okay. Yeah, thank you so much. Thanks.
Yeah, thank you. I'll still stay here for about 5 more minutes in case anyone have any questions about MQ Trader, and I'm happy to answer.
Okay. Thank you so much. Okay.
Thank you.
Okay, bye-bye.
Bye-bye. So you can send your questions if you have any other questions regarding MQ Trader in the WhatsApp group, in the chat also.
Okay, I'll take my leave first. Huh?
Yeah.
Okay, bye-bye, bye-bye.
Bye-bye. Yeah, I see a lot of nice comment. Thank you. So do remember to finish the quiz also that will be sent to your email after that. Thank you. Thank you too. Yeah, you can send us your Miss Ao Yong Bong, Mr. or Mrs. Okay, so to view the past seminar, you can send us your email at this comment section, direct to our host or panelists also can, or you can send email to this admin@mqtrader.com to this email. You can send your request for the past seminars or even the current one. Send us your email so that we can send the recording link to you also. If you have registered for the event, then you will receive the link, the recording links automatically. So here's the screen also for those who want our previous webinar links. Yeah, Richard, I saw your email. Thank you for requesting. We will send it to you soon. Is there any questions you want to ask about MQtrader? I'm happy to answer here. For the slides, most probably not, but you can look at the recordings now. Welcome. So the recordings for this event, also our previous event, it will be available on our MQdemy page, which you can see it from the screen itself. You just need to scan the QR code, or for the current one, you send us your email, and then we will send you the recording links. If not, you can also follow us on our Facebook, MQtrader, and then the webinar will be there also. For our past webinar recordings, all will be there. SIM-AS, no, MQtrader is not a broker in Malaysia. We are an independent trader group, and then we partner with different brokers, including Equities. If you want to open a trading account with us, you remember to scan this QR code. Yeah, this one. So if you have missed our introduction, MQtrader is an independent trader group that uses quantitative methods to perform our trade analysis and make our decisions in trading. And we have developed the MQtrader stock analysis system. We have made it available for all our members. So you can sign up to be our members as well through the command link. You just click into the link and open an account, like open a Facebook account like that. And then you'll be able to access the MQtrader stock analysis system already. I will wait for another few seconds. If you have any other questions, last question, I will stay here to answer. If no, we will be ending the webinar soon. Welcome. Yeah, okay. So I think that's all for today's webinar. Thank you, everyone. Glad to be a host too. Thank you and see you all in our next webinar. Bye-bye.
Thanks for watching.